All right, let's dive in. Today, we're going to look at a technology that is completely rewriting the rulebook for finance. And look, we're not just talking about an AI that can analyze the market. We're talking about a new kind of code that is actively creating the future of investing. So let's get into it. So, for about the last 50 years, one simple rule has pretty much dominated personal finance: the 60-40 portfolio. You know the one: 60% in stocks for growth, 40% in bonds for safety. It was the bedrock. But in today's world, with all this high inflation and totally unpredictable markets, well, that bedrock is starting to crack. The old rules are breaking down, and what's coming to replace them is something way more powerful and, frankly, way more intelligent. Okay, so why exactly are these tried and true models failing us now? Well, the simple answer is they were built for a totally different era, a different financial world. We're in the middle of a massive shift, and to really get it, we've got to look at how AI itself has evolved. This slide really shows the huge leap we're talking about. On the left, you've got analytical AI. Think of it as a brilliant interpreter. It's fantastic at reading spreadsheets and just following the rules you give it. But on the right, you have generative AI. This is the creator. It doesn't just read the map, it actually draws a brand new one. It creates totally novel strategies from messy, real-world data and is constantly evolving its own rules. So, how does this creator AI actually work? How does it go from this ocean of chaotic information to a finely tuned investment strategy? Let's pop the hood and see what's really driving this new engine of finance. The secret sauce here is its incredible appetite for unstructured data. We're talking about all the information that doesn't fit neatly into a spreadsheet. Generative AI can read thousands of corporate earnings call transcripts, sure, but it can also analyze the subtle tone of a CEO's voice to pick up on confidence or distress. It can look at satellite images to see if a retailer's parking lots are full or empty. And it can even gauge global sentiment from social media. It's seeing the whole picture. And the process itself is it's incredibly powerful. First, the AI just drinks in all that unstructured data, then it pulls it all together into a coherent investment thesis. Kind of like a whole team of human analysts, but working at lightning speed. And finally, instead of just picking a few stocks, it builds an entire mathematically optimized portfolio, right from the ground up. Now, here's where it gets really mind-bending. One of the biggest challenges in finance is that we only have one history to learn from, right? Well, generative AI gets around this by creating synthetic data. We're talking millions of hypothetical trading days. It can simulate a world where inflation is at 10% and the tech market crashes at the same time. It stress tests a portfolio against these wild black swan events that have never happened before, but, they could. So what you end up with is the rise of what you could call self-driving portfolios. These are basically autonomous AI agents that are monitoring and rebalancing your investments 24/7. While a person might check in on a portfolio quarterly, this AI is assessing risk constantly, navigating all the market turbulence automatically, second by second. Okay, this technology is fascinating for sure, but what does it actually mean for your wallet? Let's break down the real tangible benefits for the everyday investor. In the investing world, alpha is the holy grail. It's that extra return you get above what the market is doing. And as markets get more and more efficient, alpha gets way harder to find. Generative AI unlocks a whole new frontier for finding it by spotting the signal in all the noise. It can analyze stuff like global shipping logs or patent filings to find mispriced assets long before the rest of the market has any idea what's going on. And here's a really crucial point. It completely redefines risk. Traditional models are backward-looking. They basically assume the future is going to look a lot like the past. Gen AI, on the other hand, is forward-looking. It can simulate how your portfolio would react to a future geopolitical crisis, for example, and it can spot these hidden vulnerabilities that a human manager might completely miss. But maybe the biggest benefit of all is democratization. Really sophisticated strategies like direct indexing or automated tax loss harvesting. This stuff was once so complex, it was only available to the ultra-wealthy. Well, AI automates all that complexity, making these incredibly powerful, tax-efficient tools accessible to regular retail investors for the very first time. But of course, with this much power, you've got to talk about the risks. This technology is not some magic bullet, and it is absolutely crucial that we understand the dangers that are lurking inside the code before we hand over the keys to the global economy. This right here is the number one problem: explainability. These deep learning models are notoriously opaque. An AI could decide to sell off a massive position in a blue chip stock, but it often can't tell you why in a way a human can understand. And in finance, where accountability is everything, that black box is a massive, massive liability. And then you have the systemic risk of herd behavior. I mean, think about it. If all the major investment AIs are trained on similar data, they might all reach the same conclusion at the exact same time. If they all decide to sell simultaneously, you could trigger a flash crash, wiping out trillions in value in just a few minutes. And all of this leaves regulators in a really tough spot. I mean, how do you oversee code that is constantly changing and evolving? Who's liable when an autonomous AI makes a bad trade that costs people their life savings? We are in a total legal gray area right now, and the answers we come up with are going to define financial law for the next decade. So, where does all this leave us? Well, the future probably isn't about humans being replaced by machines. It's more about augmentation. It's about creating a whole new kind of investor. The model that seems to be working best is what some people are calling the cyborg manager, and it's all about synergy. The AI handles the insane scale of data processing and finding patterns, while the human provides context, ethical oversight, and that long-term vision that, data alone just can't capture. It's truly the best of both worlds. So the big takeaway for all of us is that we need to develop a new skill, algorithmic literacy. And this isn't about learning to code. It's about understanding what these tools can and can't do, knowing how to prompt them effectively, and how to look at their outputs with a critical eye. Our whole mindset has to shift. And that leaves us with one final question to think about. In an age where investment strategies can be generated, tested, and deployed in seconds, is your portfolio built for this new reality? Is it evolving, or is it a relic of a world that just doesn't exist anymore? And that's our look at the new code of investing. Thank you so much for watching. If you got something from this, please like the video and support the channel by clicking on that subscribe button. It really does help us out. Thanks again.